talks in Saudi Arabia between Russia and the United States, the first sort of high-level contact, direct contact between those two countries for a number of years. And they sort of, I suppose, one notable takeaway from yesterday, day one, was that they agreed to reopen diplomatic relations, embassies, and so forth, and to take the talks forward. Let's kick it with Brent crude oil, I should mention, at $76, give or take a few pennies. So still sort of nicely tight inside that pretty narrow band, one or up a dollar, down a dollar from 75 on Brent. Narendra Taneja, India's leading energy expert. Narendra, I wanted to kick off with you, get your sense in the sort of geostrategic energy analysis here. What do you think they're discussing in Riyadh? The US and Russia are coming together. There's nobody else in the room, no Ukraine, no Europe, no India. My question is Ukraine really top of the agenda for this discussion, or is this just a gateway discussion into a much broader conversation, do you think, between Washington and Moscow that might include China? We've seen Russia and China get very close in recent years. It could include, there's a big developments in the Middle East. What do you think is the sort of priorities of this talks in Riyadh?
Well, the very fact that the talk took place in Riyadh and means that actually Ukraine is very high on the agenda. But if you look at the press conferences made by both sides, Russia and the United States, it appears that top priority also at the same time is to normalize relations between Russia and the United States. That might be a kind of, an optic, but at the same time, I think it's to facilitate so that they can move forward. And if you read between the lines statement, especially by the American Secretary of State, it was very clear that he was talking a more inclusive approach, means, of course, Ukraine on the table, but also other Western partners in Western part of the Europe, including EU and the United Kingdom. So I think, as talks make progress, you will see all these parties also participating, maybe not very directly, but to start with, they're going to be consultations, and I think then they will bring them on the table. They may not appear on the high table finally, but I'm sure that, now British Prime Minister is traveling to Washington, D.C., and as we know, talks have already started with President Zelensky and with Germans. So I think, the Americans know it very well. Unless they have all these actors also on board, they may not really be able to achieve what they're seeking to achieve. So, but they've started with a kind of, optics, which basically are giving the message to the Europeans, West Europeans in particular, that, look, America is very keen to resolve this issue. They want this war to end. At the same time, they don't want that, the American interests, especially American interests, are compromised anyway. So I think it's a very important message. But the message which is being welcomed by many capitals, including New Delhi, is that at least finally somebody has taken initiative, to put an end to the war. Because there has been a bit of frustration that the Europeans were not taking any initiative to end the war. We are not saying that it should be this way or that way, or accepting everything what Russians want or everything that Ukrainians want. But at least there should have been some initiative. There was nothing happening on that front. So there is a welcome move as far as countries like India is concerned, that at least somebody has taken initiative. In that case, it happens to be President Trump, and the two parties started talking. And if you look at the body language of American foreign minister and also Russian foreign minister, the body language was very positive. So it's being read as a positive development. It's too early to say because the road is going to be pretty long.
Let's welcome Mike McGlone, Senior Commodity Strategist at Bloomberg Intelligence. Mike, I will caveat, and I know that you're not a geopolitical analyst, and that's certainly not want to put you on the spot for that. But ultimately, I want to kind of come at it through the gateway of, we have a story ourselves in our daily digest that some analysts are looking at that if these talks reach their sort of stated conclusion, it could knock, up to $10 off the oil price, and the bearishness that this potentially is for the oil market. So coming at it through that gateway, but first putting the gateway to that question being, I'm trying to understand how big a story this is in the United States. Does Trump have anything at stake in these talks? His most feared phrasing or a sort of charge would be loser. You know, he never wants to be a loser. He's playing high risk poker here. He could be perceived as a loser. So my question is this a big story for in the US, or Trump could just get away with losing or winning? It doesn't matter on this particular topic.
Well, I think Narendra nailed it. He's a loser if he doesn't do something. He said he would, and he's not the kind to not do anything. So at least just trying to stop the killing. And it's kind of entertaining seeing the criticism. Like he's trying to do something. We have 3 years of nothingness. At least start with a ceasefire, stop the killing, and move forward. But the key thing for crude oil is, like you said earlier, lopping 10 off the dollar or the barrel of crude oil. To me, it's going to happen anyhow. It's just a matter of time. It's a question of the catalyst. So the bottom line for commodities, they always go to their cost of production. Now, we did that in natural gas last year. We did that in corn last year. And in WTI crude oil in the US, it's $56 a barrel. To me, it's a matter of time. You can see the trend every day. Just look at the latest stories of EV proliferation in China and the demand and imports of crude oil from China. They're stagnant and declining around 11 million barrels a day. You look at supply accesses from US, Canada, South America, and OPEC, they're increasing every day. It's just the trend's completely bad for crude oil. And so to me, from a macro for commodities, you need some kind of shock like we had before Russia's invasion of Ukraine to get crude oil get up. So maybe Brent gets back to near $85 a barrel, but I think it's already put in a high for the year. WTI is high around 80, and I think it's going lower. The key thing I'm looking at is most significant commodity that's really from a macroeconomic standpoint is copper. Copper looks like it put in a good peak last week, around $4.84 a pound. And I used U.S. copper because it had a massive spread to CME copper. Every time it does that in history, it puts in peaks. Last year it was around 520. This year it was around 44. But it's the global tilt that Trump will succeed. This is an emboldened human being, and you can see with the Doge, he's willing to break things. They've got the mandate. They're going to do it. And cutting back on expenses in the U.S., increasing tariffs in the rest of the world is not a good thing for global economies. Now you can see, for instance, the UK's tilting recession, Germany's tilting recession, plunging bond yields in China are also going that way. So for me, this is part of Trump's focus. He will succeed in this case. If not, he'll keep trying. And I think the next key shoe to drop in commodities, when there's more significant, less killing and peace in the Ukraine, is European natural gas to drop a little bit.
Jamie Ingram, senior editor at Middle East Economic Survey. I mean, the other thing to note of those who were in the room yesterday, Jamie, are the world's 3 biggest oil producers and 2 of the world's biggest oil exporters. And in this sort of pursuit, at least in this sort of initial round of questions, is that there was a lot more on the agenda, in my opinion, ultimately, in the talks yesterday than just Ukraine. I'm wondering, what do you think could have been on the table regarding oil and energy? We had Trump say a few weeks ago he wanted OPEC Plus to lower oil prices, to increase supply, etc. Where do you think there is a nexus between these 3 actors in the context of sort of geopolitical outlook and oil policy?
Thanks, Sean. Yeah, excellent question. As you say, the big 3 all in that room together. But I think it's also worth noting that there are conversations going on outside that room all the time as well between interlocutors between all 3 countries there. I think that this is very much geopolitically a huge moment for Saudi Arabia. Let's not forget this. The eyes of the world were very much on Riyadh there. Rubio was meant to be in Saudi Arabia anyway. This meeting with the Russians hosted by Saudi Arabia was tagged onto an existing visit. They brought the eyes of the world in on them. Huge moment for Saudi Arabia, which has tried to portray itself as this geopolitical bridging power, this linkage between the tents of an emerging multipolar world. They have relations with China, with Russia, and with the US. So that's worth noting. But yes, Saudi Arabia is in a tricky spot, I think, when it comes to some of the asks from the Trump team. Yes, oil is at the top of the agenda for the US. Donald Trump has made no bones of his desire for Saudi Arabia to push OPEC Plus into bringing down oil prices. But it's very difficult for Riyadh because Mr. Trump is also asking for huge investments into the US directly. He's also asking for a big push from the Gulf states, i.e. Saudi Arabia, for the reconstruction of Gaza at some point. So those asks don't really go together. So if Saudi Arabia is to not attract the ire of elements within the US administration, they need to prove where their value lies outside of simply being an oil player, outside of simply being an ATM. And these kind of hostings, bringing together the US and Russia like this, I think is a key part of Saudi Arabia demonstrating its emerging geopolitical value for the US.
Narendra, just moving on a little bit to the fundamentals of the oil markets as they stand at the moment. I mean, Mike talking there about the sort of everywhere he looks, he sees more supply and the downward pressure on prices. But I wanted to get your sense of where is demand. There's increasing narrative in the last few months, and backed up by sort of reporting by the World Bank and others, that India's big growth moment is over, or it's certainly in a declining outlook. Your thoughts on that sort of general review, not 8%, more like 5 to 6%, and perhaps falling. Where is India at the moment? What's the weakness, and what's the outlook for it to get worse or to recover back to the sort of eights we saw in recent years, 8% growth?
Well, I've seen the reports, of course. We all have seen the reports. And if you look at the last quarter was a little bit disappointing, and the government has been repeatedly saying that you should look at the full financial year. We follow 1st April to 31st of March as fiscal year. And this fiscal, for instance, already there are reports that probably is going to do fine. So, but overall, if you look at the activities, both data and also at the same time anecdotal evidences, I think you see boom everywhere. And so my own sense is that, probably if we say that 6% growth rate or 6.2% growth rate, I think then we are on a very safe, turf. But my own sense is the government approach is to really push it to 7%, growth rate. But even if we don't get there, 7%, 7.2%, if we maintain,
I mean, clearly they would want that. But I suppose that what we want to try and understand is why has it come off? I mean, nothing goes up in a straight line forever, obviously. But there's a big question mark, a big sort of long-term narrative that India is emerging to be the new China. It has all sorts of sort of trend lines of continuous. Is this a blip, or is this something more concerning? What is the trigger, the cause? I mean, it seems since Narendra Modi didn't win his majority in the election last year, it's kind of been a weaker wicket.
No, it's just a blip. I mean, the fact that he didn't get full majority in parliament actually has made no difference. If you see the last 3 months, BJP has won election in Maharashtra, the critical state, very crucial state. Only just, last week, they won Delhi election as well with a huge majority. So I think, it's just a blip. When you look at overall, why, if you look at it from practically every major company is coming and investing in India. So why are they coming here? Tesla is the new one. We just bought space in Delhi and Bombay to open their stores. So now I think it's just a blip. You have to look at the basic and the elementary fundamentals of India's economy, agriculture, manufacturing, services, and at the same time, the government, capital expenditure, especially in infrastructure, that all seem to be growing and all seem to be doing pretty well. So my own sense is, yes, we have seen the report. I mean, those who were expecting India to grow at 9% and 10%, or those who really want to go only in the industry which is moved out of China, relocated to India, that's the only parameter, then they can reach to their different conclusion. But if you look at India as a market and kind of, the kind of policy push, the policy infrastructure, at the same time, real growth on the ground from north to south to east to west, then I think it's very safe to say that India will continue to grow at 6% minimum. And if there are winds which kind of favor further growth, you might see it actually touching 6.6 to 6.7. But 6% very safe. I don't think it's going to go anywhere.
Is kind of a floor, as you're saying. Mike, the other question, I mean, we hear about the demand there from India, one of the biggest importers in Asia after China. But on the supply side, the big question looking forward is, will the U.S. companies, the U.S. production, the big factor that Trump is really making it very attractive and easy and soft on the regulatory side for the U.S. oil and gas industry to sort of pump and produce as much as they can or want to. Are they likely to respond? Early signal seems to indicate no, not so much. Your thoughts on the U.S. production this year and its sort of response to this very soft regulatory environment that is now their current outlook for some time?
Well, Mr. Trump has pre-existing trends.
Sorry, Narendra, just to Mike there in the U.S.
Mr. Trump has pre-existing trends completely in his favor. And that is the excess of supply in the US and Canada have been increasing. And the only thing that really kicked it off and made it shut down was when prices went down. You see the trends there? So the regulation is going to matter, but it's long-term. It's the pre-existing trends that matter. They're going completely favorable for US excess supply to continue. We see every day that OPEC has to cut off. It's increasingly cut off supply to keep markets stable. The trend's just very unfavorable. So I think that's the key factor. The point is he can do it. He's willing to do it. And he's got the trends in his favor. I don't see what stops the normal trajectory. It's a normal cycle. Crude oil always gets relatively cheap after getting expensive after invasions like that. We can look at Iran, Iraq. We can look at Kuwait versus Iraq. It always gets really cheap. It's just a question of time. They're going that way. The key thing that's holding it up is there's a inordinate burden. One thing that we keep coming a little too accustomed in this country is the U.S. stock market going up. Yet it's getting very expensive. And a lot of the analysts on our team in BI point out it's too expensive to do for a correction. So to me, the greater risk in commodities is more deflation. Crude oil is the number one that matters. We've seen it in the grains. We're heading that potentially way in copper. There's only one major commodity other than some of the more equator-grown commodities like coffee.
But Mike, just to push back a little bit there, like I just want to push back a little bit on the thesis there about more U.S. production. I mean, looking oil in particular in terms of commodities, oil and gas per se, and yet a lower price. I mean, less than 70 on WTI starts to look unattractive to put money in the ground in the U.S., particularly when you consider the outlook for interest rates are much higher now than they were only a few months ago.
Well, the interest rates are going down, and also that's another focus of the new administration is to make yields go lower. And the way to get yields to go lower is part of that is energy. But my point is virtually you never get the shutdown in supply in the U.S. until you get below that break-even cost. The break-even cost is $56 a barrel. You got to get below that level. Otherwise, you can see that in the forward curve. We have normal backwardization kicking in, and that's a lot of the producers selling forward and locking in their profits already. So for crude oil to sustain, typically you need lower prices, and we're nowhere near that lower price cure to shut that off. Like the point is, pre-existing trends are towards the excess of supply increasing, and now we have a motivated administration to continue to accelerate that, to add fuel to that trend.
Jamie, picking up on that, I mean, in a way, we're hearing that Saudi is caught between two spaces here, right? The U.S. continuing to add production, now the world's largest oil producer, heading to 14 million barrels. Saudi Arabia, with the outlook of the talks in Riyadh yesterday, Russia rather, with the outlook of talks there, sanctions coming off. I mean, not that Russian supply was disrupted that much, but certainly Russian investment in new Russian production capacity, et cetera, but it was impacted, and the outlook was looking like negative for the health of the Russian reservoirs. So now that might start to look positive again. So Saudi Arabia and OPEC Plus caught in the middle there. They've no choice but to keep these cuts in place that are meant to come off from April 1st. Your thoughts on putting those two things together as OPEC Plus make their decision for the April 1st increase?
Look, Sean, they're in a very difficult position at the moment. As OPEC kind of pointed out in their latest monthly report, a lot of the policies from the US administration are boosting global market uncertainty. We haven't touched on the tariffs yet, but that's something that OPEC is certainly very concerned about when it comes to the potential to hit global oil demand growth this year. Another thing that we haven't touched on is maximum pressure on Iran, of course. You're right that Russian output hasn't really been affected, but Iranian output has rebounded considerably over the last 4 or 5 years, with the US making it very clear that they are looking to push the Iranian output and exports back down again. That, if it goes ahead, should create sufficient space for OPEC to start bringing barrels back online. But we've seen them be very cautious. You know, the Saudi Arabia's energy minister has repeatedly stated that he wants to see facts on the ground before OPEC and Saudi Arabia start to take concrete action to release barrels back onto the market. Remember, of course, they are planned to begin easing their cuts from April on a month-by-month basis. So there is scope to start the process and then pause it. And so that's what we could see. They don't want to anger Donald Trump by kicking the production increases back again. So we could see the process start on the proviso that the US maximum pressure on Iran really does start to take impact. If it doesn't take impact later on in the year, they can pause it. No problem.
Let's go to the survey question, which is sort of tackling the theme of our conversation this morning, and that is the sort of priorities of the conversation discussion in Riyadh yesterday. The survey question is asking, what was the most important topic of that discussion? I don't see the survey coming up. Maybe I don't see it, or it is coming up, but the question is looking at whether it was China at the top of the conversation, the idea of divorcing China from Russia, whether it's Ukraine, whether it's, there we go. What is the top of the agenda in the US-Russian talks? Ukraine, 2, China, Middle East, 3, or 4, all of the above. Narendra, I wanted to get your thoughts on where India is in all of this shift. We talked, obviously, the sort of where you see the talks in Riyadh and what US-Russia might be focused on. You've said in the past quite repeatedly that India's imports of Russian oil, discounted oil in recent years, not only the economic opportunity that it presented, but also to remove Russia's overdependence on the Chinese market, that India wants to make sure that Russia has other friends than just China. What do you think of the US's efforts to separate Russia and China after these 3 years of what appears to be a very close bond? And where does India fit into that equation?
Well, my sense is that, what President Trump is trying to do, with Ukraine, and if he succeeds in his mission to end the war in Ukraine, which means that, it can be business as usual as far as the US and Russia are concerned, and Russia then can focus its own business more, would have more space for that.
But I mean, just to push back, sorry, I just want to push, but business as usual, there's no such thing as Russia-US business as usual. In the last 30 years since the collapse of the 1989 Berlin Wall, we've had a variety of different pieces of stuff, but there's never been something that you would describe as usual. There's no going back to something that was as usual. Is there? What would that look like?
Well, when I say business as usual, I think it's important to understand and recognize that the overall global geopolitical landscape is changing. So if you go back, if you're comparing with what happened in the last 30 years, then you will reach the wrong conclusion. When I say business as usual, where Russia can focus on itself and realize its own potential, build bridges with the countries that it needs to build bridges. But my sense is President Trump wants Russia's dependence on China to come down so that, because President Trump's focus is China. He wants to be free as far as, Ukraine issue is concerned, Gaza issue is concerned, so that he can go, focus on China and that region 100%, Indo-Pacific region. That's my sense. And if so basically, if that happens, and if he succeeds, bring about some kind of truce or peace or, or freeze the war in Ukraine, then I think, he will have more space, diplomatic space. And also, my sense is President Trump has 2 agendas. First, make America great again. If Ukraine war continues, and if oil prices continue to be more than $80 plus barrel, then he would not succeed in make America great again agenda. No way. So therefore, it is important that he can somehow, bring peace to Ukraine, peace to Europe, and at the same time, some kind of peace in the Middle East, so that he can focus on his domestic agenda, make America great again, and his external agenda, that's basically to contain China. It works very well for India. You see, if, for instance, Russia has this, full autonomic autonomy, that's good for India. So what President Trump is trying to do in terms of, Ukraine, that means that Russia can focus on its own strengths, its own business as usual, on realizing its own potential. Perfect. That's great news for countries like India. Because don't forget one thing, as geopolitical, the chessboard goes through this massive change. It is throwing up huge opportunity for India to emerge as a kind of third pole, as a kind of a superpower in its own right, and takes its own time at the same time. So you will have the West together with, of course, you see, West unity is not going anywhere. So I don't buy this report that, Europe and America are falling. There's no such thing is going to happen. There's going to be West very strong. You will have China, which has started thinking more like the West. So China is the new West. So these are going to basically occupy most of the space on the geopolitical chessboard. But for India, this development provide an opportunity where India can be close to the United States, close to Russia, at the same time can have regular business with China.
Mike, I wanted to get your thoughts, and I'm sure you might question the idea that whether America needs to be made great again. It's always been great. I would suggest perhaps, but your thoughts on we still have the outstanding. I mean, Jamie referenced it briefly, and we haven't really plugged it too much. Tariffs, the impact of tariffs is like what's this week's sort of noisy headline? It seems tariffs is very passé, very last week, but. Very next week is Mexico and Canada coming back up into the front headlights again because, of course, this tariffs and the 25% tariffs on Mexico and Canada, which exports 4 million barrels of oil a day to the United States, are back up for imposing on March 1st. So I just wanted to get your thoughts on the outlook for that, the outlook for tariffs in general, and the impact it has or will have on American energy.
It's more significant. I think there'll be exemptions. I don't think it's a big factor for American energy. Just a big fact about American energy: the U.S. net exports of crude oil and liquid fuel are running close to 4 million barrels a day. When Trump was first president, it was a 4 million barrel net imports. So yeah, a lot of that Canada oil is refined in the U.S., but it comes down through the Gulf and gets exported. The key thing about it is what he's doing, and Narendra nailed it, to China, to Europe, and to all the major economies on the planet who have been, the quote we used to use in the trading pits, when I used to say 30 years ago, is everybody wants free trade as long as they run a trade surplus with the U.S. Those days are over. And Trump's pointing that out. These are things that have been resonating in this country for decades, certainly for people like me in markets. So that's the key thing. And that's why I wanted to point out earlier, you see those tilts in Europe and you see the tilts in bond yields in China. And I would say don't underestimate this person's motivation. He's got until the midterms. I like to suggest people read the book No Trade is Free by Robert Lighthizer. It's just a matter of time. Now, he's just not going to do it overnight, partly because there's a little bit of discombobulation. But the key thing to think about with tariffs, the bottom line is, why did most U.S. corporations shift to offshoring? Mostly was for profits and earnings. That's going to get hit, mostly earnings, which means the stock market going down. And also with DOGE, Scott Bessent even pointed out that we're going to have it's going to be a 1 to 2% factor on GDP. The world's largest employer is also cutting back significantly and spending. So that to me is all pressure factor for most commodities, particularly crude oil. That's why I'm watching it very close to copper. I think it put in a high for the year. But I would say this is just early days. Remember, it's only been a couple weeks, but these are coming, and he's not going to get a second chance. This is his last chance. He's going to do it.
Let's hope. I mean, not for the reasons of whether one thinks they're right or wrong, but ultimately one hopes that democracy holds the Constitution. Jamie, last word to you, and it's inevitably a big question, but some headlines from your perspective. We saw during the Russia's war in Ukraine that global energy flows changed dramatically, very inefficiently, with crude making huge journeys all the way to China from Russia on water, and products from the Middle East going to Europe and so forth. I want to get your thoughts about how do you think energy flows will adjust or change or go back, or how do you see it as the peace talks, as the some sort of settlement of the Ukraine comes closer? What impact will it have on global energy flows?
Well, Sean, I think that, obviously the big change will happen once there is a resolution. Prior to that, we're going to have European, US sanctions still in force. I don't see those being taken off gradually as part of talks. I think it's an all or nothing thing that's going to be on the table. I think one of the big questions, you alluded to it, I believe, with European gas there is, will Russian gas start to return to Europe under the terms of any settlement? I would suspect that European leaders will make a big song and dance about how no, they won't. They realize the perils of getting overly reliant on Russia, but that gradually over time they will start to get a little bit too comfortable, forget some of the lessons of the past, and gradually go back to importing significant volumes from Russia. Also, elections, of course, will change the tune in a lot of capitals. It's all very well and good. The leader of one government saying that they're going to take a certain position, but then, other leaders come in after elections and suddenly everything is a new table, a new offering, and they can look to possibly bump up the economic performance in their country by getting access to cheap energy from Russia.
Yeah, and one has to note, of course, that even in these 3 years, and we're coming up to the third anniversary of Russia's brutal attack on the Ukraine, Europe never stopped importing gas. It's still importing significant amounts of LNG, even though the pipeline gas has been drawn down quite significantly. We'll have to wrap it up there. Really great. Three of the best, there's no doubt about it. You guys really appreciate your insights. Well, an interesting interview coming up just to publish with Dubai Supreme Council of Energy. Thank you so much, Mike McGlone in sunny Florida, Narendra Dhaneja in lovely India, and Jamie Ingram in London. I would imagine it's chilly and a little bit grey, but we'd look forward to seeing you next week, Jamie. Big IE week. It'll be interesting to see what the dominant themes and narratives are at IE week with this big sort of umbrella of the end of the Ukraine war looking imminent. Thank you, guys. Have a great week and catch up with you all soon again. Bye-bye.
Thank you.